Today is Tuesday, the 25th of August, and coming into the market open today after yesterday, it was a relatively flat or slightly down day yesterday for most indices, except for the Dow, where the Dow did actually close up slightly green on the day, only 0.26%, but still green nonetheless. Is coming into its declining 10-day moving average and not really closing much higher above the 20-day, so not super confident that this is going to be a sustained move. And actually, if anything, it's at a point where um, I wouldn't be surprised to see it fall back a little bit. But I guess it is constructive. It is still showing that this uptrend is intact, and until the 50 days lost, I am I'm not really too holding too much of a bias in either direction. The Qs, the Nasdaq did close below its 20-day moving average, which definitely isn't a good look. But the fact that they're all kind of converging in this area and it's a little bit choppy, it's not clear to me that this is showing me any real signs of major weakness. It's very controlled selling. It's still controlled. They're not major moves to the downside. It just looks very choppy, and if anything, it just looks like price wants to consolidate. So if we are gapping up into the open today, and if there is, I guess, another close below the 20-day, that wouldn't be a good look at all, or it'd start to paint a bit of a less of a rosy picture. But for now, I'm pretty neutral based on what the indices are showing me. It's not showing me. None of them are showing me that the price wants to really break down much further. And actually, if anything, it's just kind of digesting this recent move. And that's also being shown in the VIX. The VIX isn't really spiking, and volatility is kind of staying towards the lower end of its range. The dollar is currently rejecting the underside of its 200-day moving average and is looking like it may come back down towards these lows. So that does leave the door open for, I guess, continued kind of safe haven play and gold and I guess Bitcoin now to continue to push higher. So taking a look at gold, it did close up green yesterday, but it's kind of stalling out a little bit here today. And silver also saw a flat kind of inside day yesterday as well. So it seems like momentum's kind of subsiding a little bit, and that also comes off the back of oil actually rejecting these highs here and selling off in coming into today's session, and that comes off of the back of the announcement that happened yesterday from the Treasury Secretary, and that was basically what did he call it? He called it I can't see now. Economic. Can't see where he said it, but some sort of economic D-Day. And that's basically putting a load of sanctions on the partners of Iran, or the companions of Iran, let's call it that. And I would have thought initially that would put more pressure on oil prices going up, as Iran did respond to that, saying that not a single drop, if they went ahead with these sanctions, not a single drop of oil would come out of the Strait of Hormuz. And initially I thought, okay, that's not going to be a good look. But when I saw the market reacting negatively, or not negatively, but actually oil selling off as a result of that, I looked into it a little bit further, and it was kind of vague, and it seems like there wasn't really. It was more of just a threat as opposed to something concrete happening. And Bessent actually said that he's going to give time to the countries to comply with what they're asking, and it's not something that's going to immediately impact the market. But at the same time, it also confirms that the US doesn't want to take any or escalate any further military action. So it seems that the market's actually taken that as a positive and actually looking at that as less kind of um, I guess, less escalation as opposed to or yeah, just things are actually better as opposed to getting better as opposed to getting worse. And based on how the US have reacted, I think it's or just everything they've said throughout this whole kind of, I guess, war. Um, it, it's like the market's starting to call their bluff a little bit, and this was another kind of domino to fall in that regard. Is showing that they're actually they 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 don't really have the capacity to escalate things further, or they just don't want to. So it's definitely constructive. Oil prices coming off, and I'm going to continue to monitor that, see if it actually does fall back further. But at the same time, it did, since the ceasefire that expired, the 60-day ceasefire that expired around 2 weeks ago, coming up to 2 weeks ago now, there hasn't really been any kind of updates in that regard. So this is the first update, which does pave the way for, I guess, a return in volatility in some way, potentially. Um, I'm not saying that will happen, but it definitely does pave the way, and it increases the likelihood of that. It definitely doesn't lower the likelihood. So that is something that I guess is going to continue to have to be monitored. In regards to ETFs, semiconductors not looking great, below all lower time frame moving averages. The healthcare sector ETF and biotech still looking really great. Healthcare more importantly, but again, that is not again, but that is a defensive, typically a defensive kind of sector. So the fact that this is rallying isn't the best sign in terms of the market having much more legs, the general market having much more legs in this current bull run or market cycle that we're in. The energy sector is pulling back slightly at a key logical level, but still high, holding the 10-day moving average. And this is a really solid trend for the most part. And the financial sector, another defensive sector, is also at its highs. So yeah, there's a few signs now in regards to what these ETFs, these sectors are showing us, and then also in price in the major indices that we are potentially losing steam, and this current market cycle that we've been in is potentially coming to an end as this AI trade is looking like it's unwinding a little bit. Yeah, software kind of struggling to push higher here as well, although it's not pulling back as much as the semiconductors. Yeah, software really does need to take the lead if this market cycle is going to continue, in my opinion. So in regards to breadth is not really telling me anything. It's very flat for the most part across the board. No real clues or signs. The number of stocks making 52-week lows did push higher. It was nearly 50% higher, but because it was so low, it's not that much of a move and it's not anything really to be a concern about. It's back above 100, but ultimately it's still towards the lower end of its range, and it's not really going anywhere. Yields did pull back slightly a little bit yesterday as well, and that also came off the back. It wasn't a major move, but it did come off the back of the US Treasury saying that they've basically got like $1 trillion that they can use to buy back any longer duration bonds, and I guess that is another kind of message to the market that they're not really going to allow yields to push up too much higher. So that is supportive of risk assets. And in regards to risk assets, Bitcoin is the main crypto that I'm watching just to determine overall health of the crypto market. But this recent move is definitely confirmed. Not a massive pullback at all here, and I guess what's happening right now is quite healthy, in my opinion. So yesterday the market did try to push price higher, but it was technically a failed breakout. So this just tells me that the market is holding its gains for one, but it needs more time to consolidate this recent move that we've had, and that is definitely healthy. It's a lot better than the market just rallying strongly and then selling off strongly. So allowing price to consolidate a little bit here is definitely good. Allowing these lower time frame moving averages to catch up. It looks like the 20 day is going to reclaim the 200 day very soon, and this is definitely what I would like to see for further continuation. And then also it shakes out weaker hands, late buyers, and allows things to reset a little bit more. So it has the opportunity for new FOMO buyers or more FOMO buyers to come in when prices start to move to the upside again, which I think is definitely likely. And Bitcoin and I guess Bitcoin, it kind of showed a bit of continued relative strength yesterday against the indices, especially during the opening market open. So that's exactly what I want to see. I want to see crypto and Bitcoin really steal the show here and continue to, I guess, gain mind share and yeah, be the reflexive asset that it is. The more kind of people talk about it, the more eyes that come onto crypto, the better it is for asset prices. The leaders, just having a quick look at leaders, Zcash and Hype, they did pull back a little bit yesterday, but ultimately after their recent moves, they're both at all-time highs, so it makes sense that there's a little bit of consolidation happening here. But yeah, these are the markets, the coins that I'm currently watching. But everything looks good. Everything looks good for this next market cycle in crypto for sure. But based on everything that I'm seeing so far, and based on just breadth indicators and what prices are showing me, it makes sense that coming into today, just to be neutral or a little bit cautious, as there is chances, or there is a possibility of volatility returning due to recent announcements, but then also prices showing potential signs of weakness. And the only market that I was really bullish on is the crypto market right now. But based on the failed breakout yesterday, it makes sense just to be a little bit more cautious as opposed to overly bullish, based on the market saying that it just needs a little bit more time to consolidate this recent move before the next leg higher. So coming into the market open today, I'm neutral / a little bit cautious.